The world of computing is changing, and it's happening faster than most investors realize. A quiet revolution is unfolding in the labs of a company you probably never heard of. Yet it could reshape everything from cybersecurity to artificial intelligence. That company is IonQ, ticker symbol IonQ, a pioneer in the field of quantum computing. While big tech names like Microsoft, Amazon, and Google get all the attention, IonQ has quietly been building something extraordinary, and it just hit a new all-time high. Today, we'll break down why IonQ is special, how its technology works, and whether this is the next trillion-dollar tech play hiding in plain sight. Let's start with the basics. Traditional computers, like the one you're using now, store information as bits, which can be either a 0 or a 1. Every app, video, or AI model you use is built on that simple binary code. Quantum computers, on the other hand, use qubits, and qubits can be both 0 and 1 at the same time. This mind-bending concept, called superposition, allows quantum computers to process an unimaginable number of calculations simultaneously. In practice, this means quantum machines can solve problems in seconds that would take today's fastest supercomputers thousands of years. That's why industries like medicine, finance, energy, and AI are all betting big on quantum breakthroughs. According to McKinsey and Company, the quantum computing market could be worth over $100 billion within the next decade. But among all the startups and tech giants racing toward that future, IonQ stands out for one critical reason. IonQ's technology is based on something called trapped ion quantum computing. Here's the problem with most quantum computers. They need ultra-cold temperatures, often near absolute zero, just to keep their qubits stable. That means huge refrigeration systems, complex engineering, and massive energy costs. IonQ's approach is different. It uses charged atoms, or ions, trapped and controlled by lasers to represent qubits. These trapped ions can operate near room temperature, which makes IonQ systems simpler, more reliable, and easier to scale. This gives IonQ a major commercialization advantage over competitors who rely on cryogenic cooling systems. And here's something remarkable. IonQ has been developing this trapped ion technology for over 25 years. That long runway gives it a first-mover advantage in an industry that's still in its infancy. IonQ isn't just building experimental machines for scientists. It's already turning its quantum power into a business. The company sells quantum computing hardware, software, and quantum-as-a-service (QaaS) through major cloud platforms like Amazon Web Services, Microsoft Azure, and Google Cloud. That means any researcher, engineer, or enterprise can log into cloud and run quantum programs on IonQ's machines, just like they rent cloud storage or AI tools. IonQ's revenue is accelerating fast, up 67% year over year to reach $52 million on a trailing 12-month basis. While that may sound small compared to big tech, remember, this is cutting-edge R&D territory, where most competitors are still pre-revenue. IonQ's combination of commercial partnerships and cloud accessibility puts it in the best position to turn futuristic science into real-world income. Now let's talk numbers. IonQ stock, trading on the New York Stock Exchange under the symbol IonQ, has been on an absolute tear, up more than 75% year-to-date as of late 2025. That's a stunning performance for a company with only 5 analysts covering it, compared to the dozens following the magnificent 7 tech giants. It's a sign that Wall Street is barely paying attention, which often creates opportunity for early investors. As more institutional players wake up to IonQ's potential, its relatively low market coverage could lead to sharp upward re-ratings once the mainstream realizes what's happening. So why does quantum matter so much? Quantum computing has the potential to break encryption, design new drugs, optimize logistics, and accelerate AI training. Think of it as the next computing revolution after semiconductors and cloud computing. In the early 2000s, companies like NVIDIA and Amazon were niche players. Few understood their potential until their markets exploded. IonQ might represent a similar opportunity today. The company's trapped ion approach could become the standard architecture for commercial quantum systems, just like Intel's chip design dominated the early PC era. That's why some investors see IonQ as a picks and shovels play for the quantum age, a foundational technology that others will build upon. Of course, IonQ isn't alone. IBM, Rigetti Computing, and D-Wave are all pushing their own quantum architectures. IBM focuses on superconducting qubits, while D-Wave builds annealing systems specialized for optimization problems. But IonQ's room temperature trapped ion design gives a scaling advantage. Fewer cooling systems, lower maintenance, and more flexibility. It also helps that IonQ is hardware agnostic, meaning its systems can be accessed through multiple cloud providers rather than locked into one ecosystem. This multi-cloud strategy could allow IonQ to become the default quantum provider for developers across platforms, the same way NVIDIA became the go-to GPU provider for AI developers. IonQ's market cap has surged alongside its stock, reflecting growing investor enthusiasm. Revenue is growing quickly, but IonQ is still unprofitable, as it invests heavily in R&D and infrastructure. For most investors, that's not a red flag. It's typical for emerging tech pioneers. Remember, Amazon and Tesla spent years burning cash before their technologies reached mainstream adoption. What matters is that IonQ's revenue is real, recurring, and expanding, not just grant money or speculative funding. Like all cutting-edge technologies, quantum computing is risky. There's a technical risk. What if the technology takes longer to commercialize than expected? There's also competition risk, as other architectures could outperform IonQ's trapped ion design. And of course, valuation risk. Stocks in emerging tech can be volatile, swinging 20 to 30% in a single month. That's why most financial analysts suggest treating IonQ as a speculative growth play within a diversified portfolio, not a core holding. Analysts at the Motley Fool describe IonQ as a compelling early-stage opportunity, with strong technology and limited Wall Street coverage. Even though it didn't make their top 10 stock list for 2025, it's highlighted as one to watch closely. That same team's track record is impressive. Their past picks include Netflix in 2004 and NVIDIA in 2005, both of which produce returns exceeding 100,000% over the years. So while IonQ may not be their top pick right now, it fits the pattern of high-potential innovators that could pay off massively in the long term. IonQ isn't a hype stock. It's a 25-year-old scientific pursuit finally hitting commercial reality. With its unique trapped ion technology, partnerships with major cloud providers, and rapid revenue growth, IonQ is positioned at the heart of the next computing revolution. If quantum computing delivers even a fraction of its potential, early players like IonQ could transform entire industries and reward the investors who believed early. But as always, do your own research, understand your risk tolerance, and never invest money you can't afford to lose. Thanks for watching. If you enjoyed this breakdown of IonQ and the future of quantum computing, give this video a like, and don't forget to subscribe for more deep dives into emerging tech and smart investing. Check the links in the description for free resources and quantum computing explainers. This is Mind Touch, helping you stay ahead in the world of innovation and investing. Please subscribe to our channel. Remember, this is not financial advice. See you in the next one.